Hey guys, welcome back. In today's video, we are talking about the AMC price rising, the dividends coming soon, going to the thousands, and many more in this video. Now, this week we have many things. On Monday, Cramer came to bash AMC. On Tuesday, AMC's cost to borrow 3x. And then we had Texas Capital upgrading AMC to a buy rating, and AMC pushes up their Q2 earnings. Now, AMC has 99,000 calls with open interest at $2 that are now in the money. You can see how easily the algo can flip and turn bullish. So we've already talked about how firstly, they're still continuously using the media to bash AMC. And I do think that once again, the timing is extremely interesting because they want to talk about the negatives of AMC. Suddenly we have early earnings coming from AMC. And we were already expecting, again, for the apes who have done their research, for the apes who have realized what has been going on, not just throughout the last few months, but the last few quarters, you know exactly the position AMC is in right now. You know how well we're going to do. You've seen how well the box office is doing. You've seen how efficient AMC is doing. Now, what I think a big thing about this earnings calls is that it's going to attract a lot of investors that weren't familiar with AMC, that were only exposed to the media narratives, which we all know by now is continuous negative BS on AMC. Whether it was true or not, whether it had any kind of even slight hints of truth or not, they were releasing these articles to talk about AMC only with the sole purpose of getting people to sell, of getting people to stay away. So I definitely do think that this earnings call is going to have a massive effect on AMC. As we take a look at what we are expecting, earnings are moving up for AMC because they are splendid, explosive, and most likely the best you ever seen in a long, long time. From a company that now has zero threats of bankruptcy, ran by the very best CEO in the game. So we have to realize exactly what this is. We've already said, box office is doing well, AMC is being efficient, we've seen record attendance being made, we've seen record revenues being made, and we're going to continue seeing that. But a big thing is knowing what these record attendance, record revenue actually means for AMC. A big thing is knowing that going into the Q3 that we're in now and going to Q4, just how efficient we are going to be. Because bear in mind, AMC is only going to get better. AMC is only going to improve as we go on. So the profit margin that we have right now will already be better than what we are expecting, but going into the end of Q3, going into Q4, is very likely that the revenue will be even higher, the profit margin will be even higher, and that's ultimately what's going to be something that is really going to pivot AMC to the next level. Now, a lot of now the media articles are trying to say is that is the Jim Cramer effect, where we saw him talking about this, and this is what Jim Cramer said: I wouldn't buy AMC stock. Now, they're then trying to say is that this is when AMC rose on Tuesday, they tried to say that this was responding to the comment that Jim Cramer made. Now, bear in mind is that people are buying AMC not just because of what Jim Cramer has said. People are buying AMC because they know where we are at. They know what they're buying. They know the potential there is for AMC. When you're buying into AMC, you're not saying this is in spite of Jim Cramer talking about AMC. When you're buying into AMC, it's because you've realized how well we're doing, how well we're going to be doing, and what the return is going to look like in the future. But what these articles are trying to say is that they're trying to do this only to prove kind of the reverse Jim Cramer effect. Now, we don't care in terms of what Jim Cramer says. We don't care what the media article says. We already know by now what we hold. We know what AMC is doing. We know what they're going to do. We know exactly how well of an investment we are in. And so the fact that they're trying to say that AMC is rising is because of a retaliation, is because of whether it's called revenge trade or, whether it's because it's emotional trading, that it's obviously not the case. But you see what we are talking about with how they're always trying to pinpoint these on anything else apart from the fact that people are buying AMC because they've realized what there is with AMC. And one of the biggest thing about this as well is that Cramer said he liked AMC at $30 in 2021. Now, he said he doesn't like AMC, he wouldn't buy AMC because of the balance sheet and high debt. The thing that's interesting about this is that we have less debt step now and we are less in price, and yet he's not bullish. So this is what we say with how they're using media articles to obviously give a negative narrative on AMC. Wherever, depending on what they say or whatever articles they're releasing, we've always talked about how it's the same agenda, and they don't take any facts into consideration. They don't take anything into consideration, in my opinion, where they only just are talking about how you should stay away from AMC, because if he liked AMC at 30, he should like AMC now. What's another big thing is that it's very likely we are going to be seeing more filings coming soon. We're going to be seeing more institutions accumulating. Now, the reason why this is important isn't because I want to say that institutions buying means that AMC is going to explode. AMC will explode regardless of institutions buying or not. What I want to say in terms of why this is important is because when we do see the institutions buying in, you then should take a look at what the media articles have been saying for the last few months. Once again, the constant telling you, don't buy, sell your shares, stay away from AMC. That's what the media narratives have been trying to push. But the capital are doing the complete opposite of that and buying and accumulating more and more AMC. And there's a very big point you're going to take away from that of why that's happening. And so if AMC was a worthless penny stock, they wouldn't send 70% plus off exchange volume for 5 years and still have articles trying to convince us to sell. Cost to borrow wouldn't be going up if AMC was worthless. So this is what we have to understand. Just like we already talked about with the articles, some of the other things that you need to be looking at is that if people are selling, if there is an abundance of AMC shares and that there are no FTDs, you wouldn't be seeing the FTD data going crazy. You wouldn't see the cost to borrow going up, and you definitely wouldn't see 70% off exchange, because we've already talked about how when you do see a majority lit exchange, this is something we've already talked about in the past before. When you take a look at this 14% day, this was during the time where there was more lit exchange than off pool, than dark pool. And you saw what that meant. And so again, if AMC was a worthless penny stock, we would see more lit exchange. We wouldn't see this 70 plus of exchange volume. And the fact that they are dark pooling 10 to 12 million shares a day with a cost at minimum of 50 million a week, you can see why no bet is free and that the betrayal is inevitable. It really just highlights kind of the desperation that's going on behind the scenes, what it's actually happening. They're saying that people are not shorting. They're saying that the short sellers have fully gotten out, but the cost to borrow, the dark pool, clearly isn't telling that. Another big thing about AMC and why we understand that the DFE, why we understand it's undervalued, why we understand we know what we hold, is because AMC traded between $30 to $50 for 6 months in a healthy manner. The market accepted that price. There is no resistance at $2, only crime. She can go at any time. And this really just highlights what we've said. Just like with Jim Cramer saying he would buy AMC at $30, just like with how AMC was trading 30 to 50. During the time, remember, where we are in a better position than back then, remember AMC is worth that price and even higher, because we're in an even better position right now. And so the only reason for why we are seeing this right now is because of the manipulation that we have highlighted. But it's precisely because of things like this, we know the potential, we know the value of where AMC is going. And so the biggest worry about for AMC isn't the fact that it's at $2, because we know that not only are apes holding and not selling, but they're buying more. But the things that people are worried about is AMC at 100, AMC at 1,000, and the fact that people would potentially be selling without seeing few institutions and hedge funds failing. And what I mean by this, and what this user mean by this, is obviously understanding the fact that we know where AMC is going to go to. When we talk about AMC in terms of its true value, not even including the squeeze, we're already talking about double, triple digits for AMC. And you would understand where AMC would go when we see its true value, including the squeeze. Now, a big part about this is obviously knowing the floor price, is knowing about that because of what has been happening with AMC, potentially a lot of people would be selling their shares at a lower price than the price that it could ultimately go to. Now, I've always said this, obviously you have done your due diligence, you have your own plan. But one of the biggest things knowing about this is knowing that we know that when AMC squeezes, it's going to bankrupt institutions and hedge funds. And so one of the biggest signs to really look out for is when they go to fail. And that's when I think we're reaching the ultimate price. And also another thing is that Remember that AMC was $72 for when nobody could even go out to watch a movie. Now that AMC is hitting big numbers, is worth under $2. How is that possible? This really just highlights and reiterates what I've been saying this whole video. But again, it's just an example that you need to look at. The fact we were seeing Jim Cramer talking about buying AMC at 30, the fact that we saw AMC trading 30 to 50 during a normal market, the fact that we saw AMC go to a higher price at a time where it was going close to bankruptcy, it had zero revenue coming in, you understand just how undervalued AMC is, and you understand why investors are saying that AMC can go beyond. And so a big part about this earnings as well, why I think that we can see AMC having dividends soon, why we can see AMC going to the thousands, is because right now, as we see AMC, what we can be seeing is a potential dividend because of AMC going towards that cash flow positive. And this will obviously be a good gesture towards the apes. But not only that, it's about exposing the short sellers. We've definitely seen efforts in the past before where AMC are trying to expose the short sellers. Now, one of the biggest example is obviously the creation of ape shares. And we already saw from ape shares what that meant. Again, some of you may not understand exactly what happened, but the fact that we saw it go FTD on the first day, the fact that we saw it go beyond T plus vesting and yet it wasn't forced covering, the fact that we saw the list suddenly get reset without telling us anything else, these were all proofs of the synthetic shares. Now, one of the biggest things, not only will it expose the synthetic shares, but it would also make the shorts pay is if we offer a dividend. And that obviously relies on AMC's understanding of how well they're going to do. Remember, this relies on paying off debt. This relies on free cash flow and going positive. And when we see all of these really happening, that's when a dividend can happen. And so we are very looking likely at the potential horizon of a dividend. And that is going to be a big thing. Just like we said, not only does it expose the amount of synthetic shares there are, not only does it expose the bad actors who have created synthetic shares, but it also forces them to pay for the synthetic shares that they've created. Remember, short sellers are responsible for paying the dividend first before it's the company paying. And knowing that there are billions of synthetics being created, even if it's a 50-cent dividend, if it's a $1 dividend, you can imagine just how much will have to be paid when all of these synthetics are in charge. And so when you take a look at the maths, we understand that shorts are fucked, because when you take a look at all the off-exchange internalization rate, when you take a look at what we talked about with dividends, when you talk about the amount of shares that are being traded and the cost that there is, the cost to borrow, the short fees, when you take a look at all of these, you realize what's going on. Now, this is a more in-depth in terms of looking at the cost to borrow, in terms of looking at the off-exchange. But when we talk about mathematics, when we talk about the numbers, the data, and you include everything we have been mentioning in this video, you understand why there is no way out for these short sellers, and they will have to betray one another, meaning that potentially one or two short sellers, or at least potentially 10% of the short sellers, are able to get out of this at a very, very minimal loss. But that requires for them to backstab the other institutions. That requires them to start off the domino effect. And so that is something that we are going to be seeing. And so remember, some AMC shorts may want out, but are trapped. A larger short controls their fate. They bet the farm, but failing to bankrupt AMC, the only path to victory vanish. And this is what we talked about with how the tools of betrayal. This is what we talked about, how there is the forced short liquidation possibility because of everything that's ongoing. And so now you understand why we say that AMC can obviously go into the thousands. And when you take a look at this as well, where another indication that UBS holds a very large overseas AMC short position, add that to what appears a UBS attempt last year to prevent AMC from raising cash and fulfilling debt to equity swap obligation. Once again, you see the things that we are mentioning. You see the things that are ongoing right now. And so what I think needs to be talked about, what I think needs to be understood is how they're doing everything they can right now to prevent AMC from exploding. They're doing everything they can right now to prevent themselves from going to liquidations. But the very fact that they are doing these things is just the indication of that we are getting very, very close to AMC. And the fact that when AMC does squeeze, it's going to be going to a price that we can't comprehend, because it's going to bankrupt companies that has tens of billions, hundreds of billions of dollars in their capital, and even that can't fulfill the hole that they dug for themselves. So this is why we talked about how this is going to be the biggest event. As always, on this financial advice, and I'll catch you guys next time.